is Ryan Miller, and for the past 15 years, I've helped hundreds of people to raise millions of dollars for their funds and for their startups. If you're serious about raising money, launching your business, or taking your life to the next level, this show will give you the answers so that you too can enjoy your pursuit of making billions. Let's get into it. So if you're starting a business, raising capital, or building a product, then I have a treat for you. In this week's episode of Making Billions, I have the legendary venture capitalist Anupam Rastogi from Emergent VC peel back the curtains on how to pitch and how to land that sweet VC investment. So the question is, what are you doing to position your product so investors are lining up to help? All this and more coming right now. Here we go. Hey, welcome to another episode of Making Billions. Today, I have my dear friend Anupam Rastogi. Anupam is the general partner at Emergent, a VC firm with 140 million plus under management that focuses on augmented intelligence, enterprise automation, and the future of work, cloud, and infrastructure. So what this means to you is that Anupam is about to walk us through the details on how to raise capital, how to pitch a VC properly, and how to book and build your product market fit so solid that you're going to have an awesome go-to-market strategy. So Anupam, welcome to the show, man.
Thanks a lot. Glad to be here. I know you have a great community and you do some really insightful, fantastic conversations. So looking forward to it.
Yeah, man. Thank you very much. Yeah, we've been very fortunate to be the top 2% in the world. And it's because of an amazing guest like yourself and many that have come before you. So it is truly my honor to have someone with your caliber and your background. Maybe you can help me understand, how did you even get into this industry and how did you become an expert in venture capital?
Yeah, I grew up in India. I studied computer science, so I was always into technology. And I started off my career as a inventor initially and researcher, researching new ways to make internet faster. Did some of that, published some patents and papers, and quickly realized that I wanted to be actually at the forefront of putting these things out into some of the work I did. By the way, this was now 20 plus years back, that did see light of day, but 10, 15, 20 years later. So I was a little bit early to the market. I wanted to be much closer to the market. So I moved into product management and worked for a couple of startups that saw good scaling over time and had good exits, big acquisitions, and then got into venture about 14 years back after going to business school, transitioned over into venture capital. And I saw that as a way to, I really enjoyed my startup and product journey. And I saw venture capital as a way to work with multiple startups and founders at one time. That's how I see venture even today, is it's really an opportunity to partner with founders closely, work closely with multiple companies at a time, and bring that horizontal view and skill set of having worked with a number of different companies, in the same space. I've been investing since 2009, so over multiple cycles, and have been fortunate to see a number of different journeys, have been involved in over 30 different investments personally, and then, hundreds with firms that I've been involved at. And then of the ones I've invested in, there've been a couple of IPOs, several M&A exits, and of course, some failure. And so there's learnings from all of those that I bring to what I do.
Perfect. You launched Emergent with a partner. Maybe you could walk us through about the inception of Emergent. After all that experience, now you're putting it into the single house known as Emergent. Maybe walk us through a little bit about Emergent, what it does, and more importantly, why startup founders and even investors should care.
Yeah, absolutely. So, at Emergent, our focus is around three things that we were seeing as gaps in the market at the time. And one was really coming in fairly early in the journey at pre-seed or seed stage before this traction and momentum, coming in with high conviction. So we do relatively few investments, but the ones that we do those with high conviction. And we make sure we have sufficient time at the partner level to work with each of the companies that we are working with. So we have only a handful of companies that in that first couple of years of 0 to 1 journey, where we are able to bring a lot of our prior experience and our horizontal view and skill set connections to those companies. So we see that gap of someone that can come in very early. Second was our backgrounds have been in enterprise software, but within that, we were seeing AI come on the horizon. This was 6-7 years back. The first, sort of, you can call it first, but a wave of AI, machine learning, deep learning. We're seeing that starting to form and going deeper into enterprise. So we specialize in that. We have 40 portfolio companies today across the enterprise AI space, both application layer and infrastructure layer. And infrastructure layer includes things like data, security, privacy, cloud, other things. And then application layer being all kinds of horizontal function-specific solutions specific to sales, marketing, HR, finance, and others, bringing automation to those functions or bringing automation to industry verticals. So that's what we do. So that's the second part of what we do. And the third piece that defines us is around cross-geography type of startups. So all of our startups are US market facing. We are based here in Silicon Valley. We have deep connections here. So we help startups connect into the Valley. So we only work with startups that are focused on the US market. And we believe Silicon Valley is a great place to build out the go-to-market for enterprise SaaS startups. But we like companies which are building in other tech hubs outside the Valley. And it could either be overseas in places like India, where we have a lot of background in, or we also have companies in places like Europe, other parts of US, which have similar characteristics where founders can go and build teams that can scale more. And these companies have higher likelihood of success in our experience if done well. So those are the three things that define us: coming in very early with high conviction, focus on enterprise AI for last several years. Haven't seen many journeys in that space. And then focus on cross-geography startups with US focused go-to-market. That's what we do.
Yeah, that's awesome. And so I'm curious, any of your portcos, or for those of you that are new to VC, your portfolio companies, I'm wondering if you had maybe an example of one of your portcos that came in that you guys were able to help out, just to illustrate a little bit behind the scenes of what venture capital does, and specifically how Emergent facilitates in that.
Yeah, absolutely. For us, that's actually a core part of what we do, is really helping founders in the 0 to 1 phase. And typically that involves 3 different areas that we focus on. It's many different areas, but 3 different areas where we really go deep in. One is really helping narrow down and refine product market fit, specific use cases, verticals, customer personas, positioning, pricing, all of the iterations that go into that product market fit. We want to be the first port of call for founders on any small or big decision that they're making, any referrals, inputs they need, anything they want to discuss. Second area is on the early go-to-market. So setting up your sales, marketing, customer success functions, who to hire, when to hire, what level to hire them at, interviewing candidates for a lot of these roles. So there's several of our companies where their first 5 hires across sales, marketing, customer success, they were either referrals from us, or at the very least folks that we helped interview and did dozens of interviews for those roles and helped be a sounding board for the founder for those. So that's the second area, go to market. And the third is future fundraising. We help companies connect with deeper pools of capital. Found over the years pretty good relationships with all of the top 20, 30 enterprise investors here in the Valley. And then, once we have invested in a company and they've made progress, often they go on to raise Series A rounds from tier 1 investors. And there've been many cases where a company had 3, 4, 5 term sheets for Series A or Series B rounds. And all of those were, introductions that we had made. Those are 3 areas we really gear around. And to share, a couple of examples, or one example, one of the companies we're fortunate to be investors in, is a company called Observe.ai. What they do is they help bring automation to the call center space. I'm sure everyone has had their share of, interaction with call centers. And typically in that industry, historically, there's a lot of dissatisfaction. Customers are not happy with what happened in that interaction. A lot of the corporations, the company that you're talking to actually wants to serve you well, but they haven't had a good way to really manage and train those interactions. And then sometimes even those, the person that's helping you on the other side, they don't have the right data in front of them at the right time. So they're not able to help you even though they want to. So that's what Observe helps solve for. And so we were the first investors in that company at pre-seed stage, idea stage. We were able to, my partner worked with them on really helping them find, narrow down on use cases. We worked with them on their first few hires, their next set of investors that they brought in. And it's a much larger company now on its way to sort of a larger, potential presence in that space, bringing a lot of AI and automation into those interactions where customer agents are able to serve their customers better. Another company is a company called Privado, which helps ensure privacy in data-oriented applications. So, a lot of larger companies that serve customers, they have code which is processing a lot of customer data. There's a lot of regulations around that. It has to be processed properly. So engineers today have to manually go and look at a lot of that code and certify that, hey, we are not storing this data in this manner, or we're handling this personally identifying information carefully in the right manner with the right regulations. So that's obviously engineers don't want to spend time filling out forms. What Privado does is it uses AI to automate that and figure out how the data is flowing. Is it stored correctly? Is it, is the code compliant with all the privacy regulations? So we co-led a seed round there. We were the first US investor in the company very early before they had revenue. We worked very closely with them on a lot of the initial, sales and marketing, hiring, building out those functions. They've now raised, significant follow-on capital and signing up a bunch of other customers. But those are just 2 examples, one application layer, one infrastructure or developer tool related, to give you a sense of kind of companies we partner with.
I love that. And I can tell that you guys are definitely pros at what you do. So for those of you who are listening to this conversation, what we're talking about here is this is what VCs do. So a lot of us, a lot of people, when they're founders or entrepreneurs, they're like, I got to go raise money from VC. Well, yeah, okay, that certainly is part of it. But one of the wisdoms, right? So you got bootstrapping, but you also have venture capitalists. And one of the key things to consider is not only capital, but the firm that invests in you. They're also going to help you. As Anupam mentioned, they're going to help you with pricing, go-to-market strategy, staffing, future add-on rounds, product market fit, all of these things. And so that you really get, not only do you get capital when you work with the right VC firm like Emergent, but you also get a lot of expertise and the bench depth of those companies you don't even have to worry about. So right now, they can actually help you to fill in those gaps until you can start to stabilize on your own. Would you say that's a fair statement?
Yeah, absolutely. And I think that's an area that's also personally important to us. I think that's what I encourage founders to do is work with a investor that where the model, they're aware of the model. Different investors have different models. So there's some investors which do lots of investments and they don't want to be operationally involved. And the founders who like that sort of model. So, and then, there's the other end of the spectrum where we like, and we are happy to be as involved as needed in the early days on a lot of decisions. And so founders that value that, that's a good mutual fit. So I think it's important to understand what does each investor, what kind of role do they play, how they like to help. There's, lots of other great investors as well. So different people have different areas of strength. So ours are the three that I mentioned. Those are the three areas we really double down and go deeper into.
Perfect. I love that. So I'm just curious, from all of this vast experience that you've had, I'm wondering if you knew about 2 or 3 things that you can leave behind to just help our listeners gain a competitive advantage. So anything like, let's say, being in VC, not only do you raise money, but people raise money from you. And so during that whole fundraising process, we'll say, what are some of those leave behind things or those best tips that you can give people who are out there trying to fundraise right now?
Absolutely. Yeah. So maybe you can start with fundraising because like you said, we sit on both sides there to some extent where we see about 1,000 pitches a year. So we see a lot of entrepreneurs pitching to us. And then with the companies that we have partnered, then they go and pitch to others for their follow-on rounds, next rounds. So we get feedback from that on how that's going. And some things that, we see on a recurring basis, if I had to give a few tips or thoughts on some areas. One is, run it like a tight process. So my guidance to founders would be spend a few hours really getting to understand the fundraising process. Don't think of it like other processes you may be familiar with. It's not a hiring process. It's definitely not a sales process. It is a sales process to some extent, but it has to be done differently. It has its own beat. You have to create an element of timeline. You have to have the right number of conversations going on in the process. And you have to have your documents ready, your T's crossed and I's dotted ahead of time. Mm-hmm. And you have to have different versions of your pitches ready. You have to have a 2-3 minute elevator pitch, which grabs the attention of the investor in the first few minutes, because that's when they make up their mind to some extent or, lose attention. You have to have maybe a 15-minute version of the pitch, which you can do in a 30-minute call and still leave time for Q&A. And then you should have a longer version, which you do when people are double clicking into it. Because I see a lot of investors come in with, they have great ideas. They have a lot of domain expertise, but they just haven't practiced the pitch. And what happens is they may spend, a 30-minute call, 28 minutes on their product and how great the solution is. But hey, I'm not a buyer of your product. The VC is not a buyer of your product necessarily, unless you're building a product for VCs, that's different. But 99% of the time, the VC is not your customer. So there's a lot of other areas which you need to talk about. I'd say the most important one at the seed stage is the team. And I see that, you can call it an error or omission pretty often, that founders many times are hesitant to talk about their backgrounds. I'd say that's the most important thing. You have to put that up front, talk about why you are the right founder. Why did you start this company? How did you decide to work with a co-founder if you have a co-founder or multiple co-founders? Put that up front, and what do you bring from your prior experiences besides the logos really qualifies you to maybe build a large outcome here. So touching upon those things, I think is really important. I'd say to summarize on the fundraising and pitching part, really understand how the process is done. Talk to a few other founders, study it, run it like a process, put a timeline on it, have the right number of prospective investors in your funnel. There's 2 different ends of the spectrum that I often see. In some cases, folks will have, they have 3 or 4 discussions going on, sometimes just 1 or 2, and they think that, hey, I'm going to close a round with this firm because I've had 3 meetings with them. But that's not how it works. You have to understand that the funnels are very steep. There's lots of companies and lots of investors. So you have to have a higher number than 1, 2, or 3 in your funnel. And the other end of the spectrum is I see folks that are just feeding lists of 1,000 investors into a sales loft or outreach or some of the sequence and just cold emailing the whole world. That's not a great recipe for success either. You have to, in my opinion, pick some reasonable number, whatever that is, 8, 10, 15, something like that. Qualified investors who match with, whose stage, sector, style matches with what you're looking to do, and then send them targeted outreach, ideally through a common connect, a warm common connect, or cold email works as long as it's very targeted. At least for us, it works, but it has to be very targeted. Just spamming 1,000 people just doesn't do anyone a lot of favor. So really picking, the folks to talk with, and then having a very structured pitch, which is a VC pitch, not a product sales pitch. That's really key.
Brilliant, man. So don't sell the product. You didn't say that, but sell the business almost. And what he's talking about here, folks, is we're saying, look, there's a difference between the view on the inside and the view from the outside. And so VCs have the view from the outside. So you know how all the dots connect. You know your product. You built this thing. It's a labor of love. But on the outside, VCs are looking for other things to say, how am I going to get a return? Who are your other investors? What are you all about? If you're early stage, you probably, the earlier you are in your company, the higher up on your pitch deck your team slide should go. And all of those things, which are the elements which Anupam just literally outlined for all of us. So when it comes to fundraising, choose your weapon. You can either have a machine gun or a sniper rifle. And so often, I think what Anupam is saying, I'm using different words, don't stand on the edge of the forest and just spray and pray this machine gun hoping you hit something. Actually be smart about it. Do your research. Find the investors that actually invest in what you're doing. Because trust me, I get hit up all the time too. People say, oh, you're a venture capitalist. I got this startup. Can I send you my deck? And I said, we don't just invest in everything. Like, have you even looked at our website? Right? Like, there's so easy stuff. Trust me, folks, VCs are easy. Just do your research a little bit. Understand what they invest in. Understand who the partners are. And really just position your offering in a way that VCs would want to participate in that, not necessarily in your product, because they can believe you have a great product, but not a great business. That is not what you want. And so as Anupam is suggesting, is say, don't just give me a product pitch, give me a corporate pitch. Tell me the vision, the team, all the drivers of the business value, not just the product. Yes, we want to know what your product is, but that's not the main driver of why they invest. Would you say that's a fair statement?
Absolutely.
I love it. So we talked about fundraising and we danced around pitching. I'm wondering, just from your side, you hear 1,000 pitches a year. What leave behind? What kind of things have you noticed as far as helpful advice when it comes to pitching?
Yeah, I think good practiced pitch, which is tailored to what investors are looking for. That's important. So covering really talking about the founder's background, the motivations, why they're doing this. I like to hear that, for instance. And I think that's helpful to most founders because that's what they are, or most investors, because that's what they're thinking about. And really talking about the market, why is this opportunity going to be big? And one mistake or one thing I see founders often do is they'll look for the, Gartner numbers or something like that and just say it's a $15 trillion TAM. VCs, just gloss over it. Just put yourself in the other shoes is my suggestion. What's much more useful is really quantifying it bottom up and figuring out that, hey, there are 10,000 different companies in the world that could be the users of this product, and I'm going to charge them, 100,000 each or, whatever it is. So give me that. That's much more useful. So think a little bit granularly about that market size. Talk about business model. Talk about what's the state of the art, what are the competitors, what are the alternates, what are the customers doing today to solve this problem that they have. So that's one thing that I look for in pitches. That's really important to understand because that really gives signals into what may be the adoption rates of this product. Is the pain point burning enough? Are they already using some competitors? So now do we have to get people to switch, customers to switch rather than just adopt this? Do they have a budget for this product in the enterprise space? So all of those are important to get across in a short initial pitch, at least at some high level. And I'd say some of the best pitches that we see, what I like is, founders that have gone and done very structured market discovery. They've often talked to, again, I'm focused on the B2B and enterprise space. So these are B2B customers. So often they've gone and talked to 25, 30, 50, sometimes 100 people in their customer persona. And you'd be amazed, on LinkedIn these days, if you write a well-written message, you can reach, anyone that you want. And good founders know how to do it. And they have done that. And they've, in a structured manner, drawn out some insights from it. So that can really, let's say, put your pitch, make your pitch really shine at the seed stage, pre-seed, seed stage. If you don't already have a lot of customers, that really helps as an alternate in that pitch. And then, as I was alluding to, having different versions of that pitch, have a practice 3-minute version, have a 15-minute version that you do in a 30-minute call so that there's time left, and then have a longer version, which goes into that 1-hour type meeting. It could be a partner meeting with multiple folks. So it's still a first meeting for some of the partners that are joining that partner meeting, or it could be a deeper dive call with your with the person that you are engaging with. So those are some areas that I would suggest for founders.
The debate is, everyone has their own style, and you look up online, what's the best way to build a pitch deck that VCs are going to fall in love with? And you see all these different templates and courses. And it's a whole industry just trying to keep us happy. I mean, hey, I appreciate that. But there's a debate. Number one, we've settled one, is where does the team slide go? And the answer is it depends. Early stage goes up in the beginning. Later stage financing goes down towards the end. But what about the big idea, right? So this one is like the big idea. Here's what we're here to do. This is the thing we're going to solve or create or whatever it is. In your opinion, to the rest of the world trying to make you happy, what do you like to see? Where in the pitch deck, if at all, do you like to see the slide, the big idea?
I think it has to be really early in the deck. So, you talk about team, and I think you just jump into the problem and the solution. And there's different ways to do it. So there's no right answer in my mind, but I think you have to hit on what you're doing pretty quickly in the first few minutes to keep the attention. What is the problem and why is it big? I think those are, in addition to the who is doing it, which is the founders, those two are the next biggest questions. What is the problem and why is it an interesting problem to solve? Which goes into then market size and all of those things. So I'd say hit it up as soon as you can in the flow.
I love it, man. I totally agree. So that I put you on the spot there. I appreciate that. You nailed it. So Anupam and I both agree that early on, get the big idea in the mind of the investor that you're pitching, regardless of whatever it is, whatever you're solving, whatever your thesis is, whatever it is. Make sure they understand the big idea of like, here's what we're trying to do. This is why it matters. Here's why you should care. Here's what it means to you. Let me tell you about my team. And then you move forward and then you go on. I absolutely love that. Now, I did ask for 3 things. What would be a third thing that you would really wish that founders or aspiring venture capitalists, anything at all, what would be the third thing that you would love to leave behind?
Yeah. One area I work pretty closely with founders on once we partner with a company is on building out their early go-to-market. Again, being focused on B2B SaaS, and a lot of our companies are tech-driven. So we have a lot of founders who have technology or product backgrounds before they, started this company. Often then the question comes, okay, now we have a product we've built, we have some level of interest from customers. How do we now scale and get more customers? And one natural reaction often is, hey, let's get someone to head sales and scale out the sales team, which generally seen in the first, the 0 to 1 journey, it really has to be driven by the founder, because sales and product are not disjoint at that point. Sales and product are very closely tied, and it's really the founder, the founding team that can play that role of really taking that feedback back and forth very quickly. The second reason for that is that, the early stage sales is really much more of an art, and there's not that many people you can hire who would be able to do that for you. They don't, first of all, not many people exist. And if they do, then with a startup budget, they're probably not someone you would be able to hire at that early stage. So my recommendation to founders always is that be ready to and be prepared to drive the first 0 to 1 journey. It could be, $1 million ARR, $2 million ARR, somewhere in that territory. The founder has to really spearhead from the front lines that whole process. Of course, you could hire people to help you at some point. Once you have some traction, some early traction, you can hire people to help you with the sales process, but you really have to run it yourself, or one of the founders has to do that. So that's one input that I often find myself sharing and working with founders on. The second related one is, question always comes, who do we hire on sales and marketing? Do we get a head of sales? So let's say you've crossed that early journey, you have a few customers. Now, again, do we get a head of sales, and that head of sales will hire lots of salespeople over time, or vice versa? Do you get someone who can actually do sales themselves, and then you have a few of those people, and then you get someone who can manage them and lead them? My experience has been that, again, the second one actually works better, and it actually goes a little bit hand in hand with what I was saying earlier, with founders actually one of the founders leading the sales org, and then hiring salespeople directly working with them. That generally, in my experience, has ended up working well or better than the other approach. Of course, there's no right answers. I think different circumstances, that's where we have a lot of those discussions with the founders we work with on, who to hire, when to hire them, what kind of profile should they have. Another mistake or another area I see in the early days on the go-to-market and sales side is founders often, when they're looking to hire, let's say the first couple of sales reps, they're trying to go for the big names and saying, hey, in my industry, here are the 2 big names. I'm going to hire the number one, or, one of the top sales reps from company XYZ, which is the number 1 company in my space. And sometimes they're able to do that. They will pay the top dollar and they'll get this, top rated salesperson from that org. Now, the problem with that is sales in an early stage startup where there is barely some level of very early product market fit, let alone a playbook, is very different from mature or larger companies. Larger companies have all these playbooks, they have a brand, they have a lot of existing customers, they have these sales motions, they have territories which are well defined. So these people are working in a very tightly defined spectrum. They know the customers they're going after. These customers are coming in very warm already. The product is well defined. There's a lot of collateral. The pitch is very well defined. And so you are attracting people who can work very well in that environment. Now, some of them may translate into the startup environment, but my experience has been that correlation is pretty low. Success in that very well-established environment does not map necessarily into the startup environment. So I'd say really picking well, and that goes for a lot of other market-oriented functions, including marketing, customer success. So that's my input to founders often, is that when you're evaluating, let's say, the resume, just hide the logos and look at what they've done. Ideally, they have done that 0 to 1 journey before in that role. So if they're hiring a salesperson, they have been a salesperson at a 0 to 1 type startup. Ideally, if you're looking for an experienced person, or ideally it's and they're a great learner. So it could be someone who maybe doesn't have that much experience, but they're great learners. And often it's also people that have multiple skill sets. They're good at multiple functions. Because again, in the early days, they will end up playing a lot of roles. There aren't yet those very well-defined guardrails and narrowly defined roles yet. A salesperson may also get involved in, some product conversations, certainly some customer success, retention, upselling conversations, sometimes marketing and collateral they may have to design themselves. So you're looking for more of a all-rounder than someone that's very specialized in a certain kind of swim lane. That's another area that we often find ourselves, working with founders on. And that's my input to founders, is make sure you're hiring the right kind of person for the stage you are at.
Yeah, I love that. So go-to-market strategy. So that is a huge part. And if y'all who are listening, if you don't know what that is, I would encourage you to really understand what a go-to-market strategy is. If you at some point expect in your startup to raise money, just have a sense of what it is. No one expects you to be perfect, but the more stuff that you can have even notionally figured out, the better that will land with venture capitalists. So now that we're around in third base, we're bringing it home. Is there any last minute remarks, anything you would like our fans around the world to know? Anything at all?
Yeah, no, I'd say it's a great time to be founders right now. A lot of activity with generative AI. Our belief is every workflow in the enterprise and how work is done across every business function, could be sales, marketing, customer service, operations, HR, and every vertical industry that you can think of. Everything is going to change over the next several years and next couple of decades. So it's a fantastic time to be out there if you're a founder. Really incorporate a lot of those newer technologies that are coming in as quickly as you can into your thought process, at least, if not your product. But yeah, great to be here and share our thoughts. It's easy to find us at emergent.vc. And, I'm on LinkedIn as well. Easy to look me up there. And pleasure to be here.
Awesome, man. Well, thank you so much. So just to synthesize everything that Anupam talked about, fundraising, master that process, understand that is a process, and then learn what that is and follow that very regimented but effective one. Namely, the big one is don't stand on the edge of the forest spraying a machine gun and calling yourself a hunter. You're not. You're just trying to get lucky. So actually be someone, hunt down those VCs, understand what they love, understand the partners, really understand that, get your list. And that is a big part of your process. The second thing that Anupam talked about is pitching. Pitch what investors are buying, not what you are selling. There's a big difference that to get that check is not necessarily just because you got a cool product. That helps, but that's not it. It's not enough. And so understanding how are they going to make their money, right? Let's just say it out loud. He didn't say that, so maybe you're a little different than me, but I doubt it, is to say, help us understand what this return profile looks like in your business. What are your revenue? What are your assumptions? What's your growth rate? Understand what VCs are buying is not always what you're trying to sell. And then finally, go to market strategy. Know what that is. And ultimately, big part of that is don't outsource your sales leadership too soon. If you're a founder or a leader or an emerging fund manager, it is your job as the founder to drive that revenue. Do that. You do these things, and you too will be well on your way in your pursuit of making billions.
Wow, what a show. I hope you enjoyed this episode as much as I did. Now, if you haven't done so already, be sure to leave a comment and review on new ideas and guests you want me to bring on for future episodes. Plus, why don't you head over to YouTube and see extra takes while you get to know our guests even better. And make sure to come back for our next episode where we dive even deeper into the people, the process, and the perspectives of both investors and founders. Until then, my friends, stay hungry, focus on your goals, and keep grinding towards your dream of making billions.